Welcome back, traders. I see a lot of misinformation going around about ICT trading concepts like sell side imbalances and buy side inefficiencies. For those of you who have been told busies and SIBIs are fair value gaps by people who are not qualified to teach these concepts to begin with, you're going to learn today that these are not fair value gaps, but rather inefficiencies between buying and selling in price. Why should you care about imbalances and inefficiencies in price? If you are taking low time frame trades and scalping without it, you will struggle with your entries. On my channel, there is no fluff, there is no guru jargon, just straight up value. Let's go ahead and break down imbalances in price to the people out there that have been saying, oh, there's a SIBI or a busy. You're just outlining a fair value gap. Don't do that. I understand that you've probably been taught by someone who doesn't understand price, and ICT himself is not breaking it down in a way that makes it easy to understand for you guys. So that's where I come in. That's what I'm known for doing. We're going to start right here. From this low to this first green candle, buyers did not have a chance to buy in here. From here to here, this last green candle is going to be a sell side in imbalance, but a buy side inefficiency because buyers never had a chance to buy. All right, step one to figuring this out and why this is a sell side imbalance, buy side inefficiency. We need to find the last area in this price action where buyers had a chance to buy. That's the easiest way to do it. We can safely say that this is the last area where buyers bought. Now, why isn't this part of it? Because both buyers and sellers had a chance to buy there. And then same with the rest of this price action, because if you take the top here and make a line, boom. And then from here, boom. So in this area, both buyers and sellers had a chance to buy inside of here, there, thus making all of this is sell side imbalance, but only here is a buying inefficiency because there was no buying inside of there. So you can look at the SI as a fair value gap, but then the BI as a buying inefficiency, meaning buyers didn't have a chance to buy. Let's go ahead and go forward here and see what happens. Okay, now we're going forward. We're going to see where does price fill. Okay, right there, you can see that it went right back to where I highlighted because that is, in fact, the last place buyers had a chance to buy. Let's look at some bullish examples here. This is a great example of what we're talking about here. This is today. Let's go and see where was the last selling that took place. Right here. That's the last place that sellers had a chance to sell. So then what would this be? This would be a buy side imbalance, sell side inefficiency, because sellers did not have a chance to sell from here to here. This right here is a busy. It's pretty simple, right? It's not like super complicated. You just find the last place that sellers had an opportunity to sell and a price leg up. That is going to be your bottom of your busy. And then find the last place they had a chance to sell on the top side of the leg. And that is going to be the top of it. Now let's go forward and see what actually happened here. Boom. Where did price gap down to? The last place that sellers had a chance to sell right there. Where is support found? The last place sellers had a chance to sell. This right here is void of both buying and selling. It is true liquidity void because it is a gap in price. Then price comes up, right? Now, where was the last place sellers had a chance to sell? Right here, right? Let's mark that off. In a bullish market, you're going to want to find where was the last place sellers had a chance to sell. and then that is going to be your support. Oops, well, now we're here, but now it's a live price action. That's all we have going back, but you should be looking for price to return back to here, just as it did here. But on another time frame, let's drop down to, let's say, a 2-minute. Then we can zoom in here. Now on this price action, where was the last place that sellers had an opportunity to sell before this move up? Right here. And where was the last time in the current price action they had an opportunity to sell? Right here. So what is this? A buy side imbalance, which is right there. That's a fair value gap and imbalance. But a sell side efficiency is from there to there. So I hope you guys are getting it now. It's not that complicated if you just look at it the way I'm teaching you. All right, one more example, and then I'll show you how I use it in my trading. Okay, we had a sell side imbalance that is void of buying activity. Therefore, buyers did not have a chance to buy from here to here. So that makes it what? A SIBI. So your SIBI is from here to here, and then you should expect price to come up and fill in here. Voila, there you go. Now, how do I use it in my trading? So how would I use this in my trading? For example, right now, I am in a trade with my funded account. It's a live funded account. And I entered right here because we know that sellers had a chance to sell. We know that sellers had a chance to sell. We know that buyers aggressively bought here. Now, is there a sell side inefficiency in here? No, because they sold right here. So there technically is no reason for price to come down here. Yes, this is an imbalance. It is an imbalance in price, and it could come down there, but does it need to satisfy both buyers and sellers? No, it doesn't, because this has been painted over once, twice, 3 times this area. That's the best way and the most simplest way to look at it is you need at least 2 passes in price of buying and selling for it to become balanced with buyers and sellers. Fair price action where both buyers and sellers had an opportunity to buy and sell. I think I've said that about 100 times this video, so it's definitely locked in your heads, right? But that's how I would use it in my trading. If you're interested in getting funded, check out my website. It is verifiedfundingcompanies.com. You head to here, up to here on the homepage, and it will take you to here, which is going to be the discount page. I update this every single day. There's a new discount. You can sign up for my newsletter, get tips and tricks, plus the funding discounts of the week. I'm going to try to do it 2 times a week. Blue Knox has an 80% off sale. Use the code KING80. This is valid all of October. Apex Trader Funding, 71% off all accounts. It's a lifetime discount. So is Blue Knox's. Meaning if you fail, you can let it get rebuild. Take Profit Trader has the best sale by far going on right now. 40% off of all accounts, but then no activation fee, which saves you a lot of money if you're able to pass the evaluation with 50K account. Saves $130. Use the code KING for that. The way Take Profit's payout structure works is once you're over the threshold, you can start withdrawing even if you hit it from day one and there's no restrictions. They do very quick withdrawals. Top Step Trader still has that same discount, $49 for 50K, and then so on. Make sure you guys click on the pictures and it will take you straight to the discount that's active. All right, guys, so you can see here that in this example, price is moving up. This is my Asia session turn setup where price comes down, hits the 4 p.m. closing price in New York, and then bounces puts in displacement. I front ran it a little bit. Normally, you would want to wait for this to be returned to and then enter long, seeking either higher session or until 9:30ish. I think this video should really help you guys, and if you use it properly, you should do really well with it. And for you guys that have been saying busy and civvy, now you guys actually know what it means and how to utilize it. If you want to check out my Asia session turn strategy, click the video in the right hand corner right now.